Altcoins are coiling. Ethereum is setting up for its biggest move in years. The charts don't lie, and what's forming now could trigger the long-awaited altcoin season. But here's the twist. The setup looks bullish, yet we're still at resistance. So the real question is, are you positioned for what comes next? Let's dive in. First, let's talk about the altcoin market cap excluding Bitcoin. Yes, the current monthly candle is red. But zoom out, and the picture gets much more exciting. Momentum to the upside is still present, and there are 27 days left in this candle. We're not done yet. Here's what I'm watching closely. The 20-month moving average has just crossed above the 50-month, echoing the exact trigger we saw in the last bull market. Back then, this cross sparked green candle after green candle. Now, we're seeing the same setup and 9 months of compression, unlike anything in crypto history. Could this be the calm before the altcoin explosion? On the weekly chart, we're seeing the 20-week moving average overtaking the 50-week. Again, something we last saw in May-June 2020, right before the last massive altcoin run. But here's where it gets even more compelling. Our altcoin risk model score during that 2020 move was in the 15 to 20 range. Today, it's at 23. Nearly identical to the last takeoff point in the previous cycle. A coincidence? Or confirmation? Either way, caution is still warranted. These moves never come without pullbacks. Ethereum chart. The trigger is here. Ethereum is holding the key to altcoin season, and the trigger setup is happening right now. We've been tracking a multi-year busted pattern on Ethereum. The move back into the apex, the break through the trend line, it's all unfolded exactly as forecasted. Right now, ETH is grappling with that same trend line, acting as resistance once again. Could a breakout push Ethereum toward $4,100? Or are we setting up for a dip that completes the inverse head and shoulders? I'm leaning toward the latter, because the structure is still forming. Risk model and data, smart patience wins. ETH's risk score was 57, now it's fallen to 45. Historically, when Ethereum is at this level, price moves higher 64% of the time after 3 months, and 71% of the time after 1 year. That's powerful, especially when paired with a business cycle showing disinflation, falling rates, and incoming liquidity. But remember, it's still a game of patience and preparation. We must be ready for downside. Ethereum already rejected $3,900. We could fall to the 50-day moving average, around 10 to 16% lower. Worst case scenario? A capitulation wick down to $2,500 to $2,800, testing the 200-day MA before a major reversal. Not my target, but it's a possible setup. And here's the big picture. If this right shoulder forms on the macro inverse head and shoulders, the target is $10,000 Ethereum. But it won't be a straight line. Be ready. The market is showing us the signals. Ethereum's breakout is the trigger. Altcoins are coiled. And risk scores are aligning just like 2020. This is the time to set exit targets. Monitor risk models. Use data, not emotion. If you're a long-term investor, planning exits based on key risk levels 60, 70, 80 plus will keep you ahead of the game. Don't wait until it's too late. We've launched a 7-day free trial of the CCV intelligence system, complete access to our exit planners, risk models, and AI tools. Test your strategies, set alerts, and plan with precision. Whether you're holding ETH, ADA, SOL, or other altcoins, prepare now. Altcoins are locked. Ethereum's power move is building. Will you be ready? Hit that subscribe button if you want daily crypto updates with real data, clean charts, and no hype. Disclaimer: this content is for informational and educational purposes only. I am not a financial advisor, and nothing shared in this video should be considered financial or investment advice. Always do your own research before making any financial decisions.